Well, for now, we are celebrating a Prosperity Day. March is likely to mark the 5th month of lower equity mutual fund flows. Remember, SIPs have held steady till February, but the flows don't look that great. What does this declining trend mean for the market and investors? As we celebrate Prosperity Day, NSE Prosperity Day, we speak with three gentlemen: Kailash Kulkarni, the Chief Executive of L&T Investment Management; Vishal Kapoor, the CEO of IDFC AMC; and Swarup Mohanty, the CEO India of Mirae Asset Global Investments, to find out why flows are tapering and how it can be reversed. Gentlemen, thank you to all of you for joining us on the show. Swarup, let me start with you. You know, the expectation was that there could be some revival in flows this month, but it still looks bleak so far at around 4,000 crores for the month of March, compared to about 5,000 crores last month. And then we know the drill, right? About 10 to 15,000 crores in the preceding months. What's going wrong, and how much do you think the sales could be over the next few months?
See, I think the trend for this month is already spelled out. I think some of the figures which you shot out were a little surprising to me, because I did expect the figures to be a little higher than that. We still have 5 days to go. Let's see how it happens. But flows are very sentimental in nature from an investment behavior perspective. There have been a lot of ifs and buts as to why people should invest or people should not invest, and they've completely been caught on the wrong side of the market. If you look at the reversal of the market, especially from an NAV perspective, some of the mid caps are up 10% absolute in the last 30 days. The large caps or multi caps are up 5-6% as we speak. Even the hybrid is up 5-6%. And people are still waiting for everything to be all right before they invest. And that's a lesson which we keep on talking about from an asset management perspective. But it's sad to see that it does not percolate enough. But we are seeing that percolating on the SIP side, and that's a completely different story altogether. Month-on-month growth, and look at the return effect that those SIP investors who have accumulated over the last 2-3 years would have seen in the last 30 days in itself. So I hope others are encouraged by that and come back and see the wonderful India equity story. But I mean, if I were to put things in perspective, I don't see much change, because there has been an outflow on the balance fund category or the hybrid fund category. That is pulling down the figures a bit.
Well, okay, let's take that conversation forward with the other guests as well. Vishal, good morning. Let me come to you. Since we're talking numbers, I mean, would you put out any guesstimates for the latest figures that we'll get on the 7th of April, both on the equity side, particularly on the debt side, because there's a lot of regulatory change that's also taking place with respect to how debt securities, for instance, how liquid funds are valuing securities, the maturities, etc. A lot of those norms also changed during the month of March. So your sense on the flows?
I think March tends to be a soft month for fixed income traditionally, but we are still seeing positive flows this month so far. So I think that would be a good outcome, to see a net positive in March. If we were to get to that, then at least that part of the market seems to be quite positive. And for all the right reasons, which is, beyond the measurement on, what's happening on valuation, I think the macro picture for fixed income does look quite sanguine. So, real returns over there are quite attractive. I think if you look at the way the yield curve has moved, there are great opportunities there. So I think investors may be still being cautious in keeping the money short-ended so far. So we've seen net positive flows in both the cash as well as the ultra short-term category. But that does look like a positive month. Coming back to the equity side, I think it's holding strong. So one way to look at it is that I would expect it to be close to February figures, if not a few hundred crores here or there, which means that it's not dipped further. And like Swarup mentioned, I think if you look at it, as almost two parts to the market. The long-term retail investor through SIP flows, if you were to use that as a measure, still seems to be quite strong and steady. But some of the lumpier investments, I think that decision seems to be getting either held out and maybe a bit of a wait-and-watch approach before elections.
Sure. We also have Kailash Kulkarni of L&T Investment Management, who joins into our discussion. Kailash, hi, good morning. I wanted your thoughts, because, the surprising bit is balance funds have seen a big outflow over the last 3 months. I mean, in January, there was 1,000 crores. In February, 1,000 crores gone. The estimate is in March as well, there'll be a big outflow. What explains this?
Well, I think there are a couple of reasons for that. If you look at the last 2 years, we've seen that balance funds have actually got a disproportionate amount of money as compared to the other categories. So this was the category which grew the largest in terms of the flows which are there. So obviously to that extent, when things start looking differently, you have seen that people stop putting in more money or pulling out the money. Also, some of the people did come with high expectations of some dividends, because of which also we are seeing certain outflows. But I think overall the flavor has been that there's been a shift from the balance category more towards ELSS category as well as the equity, diversified equity category. So we have seen these categories grow in this month. I just have one small data point which I'd like to share with you, which may be a little different from what my colleagues from the industry spoke, is that we've actually seen a significant upside in terms of the retail part of it, which means as it's classified as retail 1 or retail 5, but it's the HNI category which has actually seen slowdown of flows or redemptions, because of which the overall picture didn't look very well. And my gut says that March is going to be at least 10 to 20% higher in terms of gross sales as compared to February.
Okay, that's an optimistic assessment, Mr. Kulkarni, 20% higher gross sales. But the question is on the net as well. Let me take that point forward. The problem has also been high redemptions. So while gross inflows perhaps have not been that bad, I guess high redemptions make sure the net number has been depleting month on month. What is the picture? What is the assessment you have with respect to redemptions as we go forward?
I think we'll be similar or a little higher in terms of the net sales that we will have February as compared to February 2019. So I'm not seeing any further downside. If you look at retail, just to put into perspective, we had added another 8 lakh odd folios, 7.5 lakh SIP accounts, and unique customers which came in January were 2 lakh plus. So we continue to see retail participation coming in. And when we say unique, these are first-time investors into the industry. So these are very healthy numbers. We have seen that 2 lakh plus kind of number consistently now month on month.
Okay. So before I go to Swaroop, Mr. Kailash, just one more question on SIP flows. I mean, for the last 3 months, we've seen some steady flows of 8,000 crores plus, whether it's December, Jan, and even February. What are you looking at over the next 3 months?
That's right. I think SIP flows will continue to grow. Maybe the difference in growth has come down month on month, but like Swaroop mentioned, these last 20 days there's been a significant sentiment change. Those who had accumulated SIPs over the last 2 years have seen a big jump just in terms of the returns they've seen because of the rally in the small and mid cap over the last 20 days. I think once the people have realized that SIPs is a long-term game, and hence I would not see these numbers fall off in the coming financial year.
Okay. Gentlemen, I want to move to some regulatory issues as well, because there's a lot moving with the, the way the framework is set up, and we're getting new rules on a daily basis. In fact, on Friday, the regulator came out with, certain rules and definitions of how you will value money market instruments in case there is a change in the rating, I believe. So, Vishal, you want to take up this point? I think they're talking about an independent valuer. Perhaps looking at the recent examples, what we've learned from the IL&FS crisis, what we've learned from DHFL. So, and as of my understanding, this is only rules and regulations with respect to debt right now. We still don't have a framework for equity. And I mean, this harks back to what we saw in the case of Z, for instance. So how would you want to see some of these issues play out?
So I think the debt valuation circular on Friday has been, to our mind, anticipated and expected by the industry for a few weeks or months now, which is really to make the valuation much closer to an independent valuer's view or the market's traded position, and also reduce the period for which you can accrue returns on a short-dated security. So moving it from 60 days to 30 days, for example, means that everything above 31 days has to be marked to market, which makes it closer to its intrinsic value in some senses. And on the other one, which is you're really reducing the amount of leeway available to a valuation committee within an AMC and keeping it more market-facing in a sense. So anticipated, and I would think in line with what the industry was largely looking at.
Okay. So just to understand that point, and maybe Swaroop, if you want to come in, if you've sort of had a look at these regulations. So the regulator is now talking about a valuation agency which needs to come in and give an independent value. So do AMCs no longer have the leeway to look at an internal valuation and mark down securities as the need arises?
No, I think from what little I have been, discussing or being purview to the discussions with the regulator has been very clear that AMCs need to value them on their own, and these valuations should be completely, in separation with what happens from the external valuation. I mean, the fact is the investor is owned by us, and we can't get away by the fact that this was valued at some or rated by some, and hence we are not at fault. That's not something which the regulator is hinting at. Really, the regulator wants us to own that responsibility, and rightfully so. But if there is one sort of independent valuator, then it makes things easy for us also. Here there are 3, 4, and it brings some sanity to the table. And as Vishal said, this was anticipated, and it's all for the good. I mean, if we have one sort of benchmark which we go back to, it's always good for everybody. But that does not take away the responsibility of the portfolio from the AMC at all. The portfolios belong to us, and the repercussions have to be faced by us. There's nothing wrong with that. That is the fiduciary role we bring to the table, and we have to uphold that at all points of time.
Kailash, what's your own view on this? I mean, the objective of this order was to achieve, uniformity, consistency across the industry on valuation of many of these debt securities. Do you think that will be achieved, and anything else that needs to be done?
Well, yes, I think this is a really welcome move, because now, you're going to compare apples to apples, and it's not going to be a differentiated comparison. So it's really a good move from that side. We were aware that something like this is coming up, and hence, the industry is prepared to implement this. I think one of the important things from a corporate side, typically, because the liquid and the ultra funds are, majority of the investors are the corporate segment. I think it's for them to now really look into their treasury requirements, and people who have the 1 day, 2 day, 3 day money would actually come into the category called overnight funds rather than just being in the liquid category. So there will be a little bit of sacrifice on the yield that they would earn between an overnight fund and a liquid fund. But the liquid fund going from 60 to 30 would become a little more volatile. And hence, I think it's also each customer who looks at this segment, whether it's a corporate or a non-corporate, would really try to assess their requirement in terms of the period that they want to stay invested in, and then decide whether they want to come into overnight funds, liquid funds, or ultra short-term funds. So it is going to really be much more involved discussions between the AMCs, and the constituents are going to invest into these categories. So I think it's good for the industry, it's good for everyone.
Okay. Vishal, just to complete this discussion, right now these norms are only talking about money market securities and instruments. No one's talking equity. Do you see perhaps that being the next level or the next stage in the event? I mean, I'm only going back to the Z example because that's the first time we dealt with this kind of a situation where, the industry decided to get together and not mark down the value of a certain equity holding. So in that case, is that going to be the next wave or the next level? And to the point that Swaroop also raised, I mean, who are these valuation agencies? Will there be multiple agencies? Whose word ultimately prevails?
So to be honest, I may not be in the best position to comment on either of these two questions. In terms of valuation agency, that's something I'm sure AMFI will work on to decide on which are the, which is the 1 or 2 agencies that one wants to appoint. On the first point, though, that's still related to debt. It's not really an equity valuation issue. I don't think, the intent there is that, that equity valuation per se, especially where these are stocks which are highly liquid and therefore there is a very accurate price which is available. I don't think that's heart of the issue. The issue really is that if you had a debt holding linked to that equity valuation, how do you really value that in a situation where there's an agreement to not sell the shares for some time? So it boils back to really how is a debt security going to be valued? And to some extent, I think, as more such I think, arrangements slash, I think, structures come into play, I'm sure the regulator will look at all of these types of deals to see what's the best or a fair market valuation for any such deal or structure.
Okay, gentlemen, we have run out of time, but that was really an enriching conversation. Thank you so much for joining us and giving us your view on the fund flow as well as the regulatory moves that have been taken. Well, back to the markets, it's stabilized around 11,350. So the selling pressure has been arrested for now. The Sensex is still down over 300 points and the Nifty is seeing a cut of about 100 odd points. With that, it is curtains down on Bazaar. Thanks so much for tuning in. Lots of trading ideas lined up on Chartbusters.